All right, guys, welcome to my YouTube channel. If you just want to do some analysis on my trade for previous the one I had last week, and I will just go through the trade for the week and see how it's going to look like with check the dollar price index, the DXY chart to just see the analysis and see what we'll be looking at for later on today when the market opens. Right, guys, if you know you're new to this channel, please like, subscribe, and share and leave a comment on this video, please and please, so that my channel can grow. That is all you can do for me. If you know you're just new and if you know you're not a subscriber, please like and share. Just subscribe. Thank you very much for doing that. All right. So on Monday, this was I think the market when the market opened on Sunday night stroke Monday morning. I was just observing the charts and see what's going to happen. And probably around 1 a.m. in the morning, I just decided that okay, let me just take this trade and see if uh what's going to happen the next morning. So I took the trade, and when I woke up around 4 o'clock, I discovered that price has pushed. No, price has gotten up to this extent around 2 o'clock. Then when I checked again, probably around the 4 o'clock, 4:30 o'clock, I saw that price was trying to do kind of a reversal chart pattern somewhere here. Let me zoom in. Yeah, I was seeing something like a morning star formation. This is morning star formation somewhere here. So I was like, okay, let me just take my profit because it's early in the morning. So I took my profit and went back to bed. I took my profit and went back to bed before London session. So that was the Asian session. So I just felt like, okay, price has turned this particular place to be a resistance. Like here was a support that bought to the upside. Like price was trading, like price reconsolidated somewhere here. So made this particular place a support and pushed up. Then when it broke back, it came back, turned this particular support to resistance to it turned this particular support now to resistance, sorry, and pushed back. So I was just watching the trail. I was like, okay, price was doing higher, higher, low. Then when price pushed up, I was like, okay, price came back to retest this resistance again. That was previously support to the upside. So I just saw this 15 minutes bearish engulfing. So I was wanting price to just push up since price broke it. So it was like kind of since the market just opened, to just have to respect that particular move to the downside. And when I took the trade, I just used a mini stop loss and price pushed up down here. It did a very small trade. I was risking just only 130 to make about 250 pips. So which is not really up to almost 1:2, 1:1:2. I don't really do 1:1, 1:2. I just do pips just to make sure that yes, I make a lot of money from it because at the end of the day is what you compound, not the risk to reward. Although risk to reward goes, yes, risk to reward goes, but most times you can't be consistent in one particular amount of money you're risking. Because most times you see a trade, you'll be risking like 100 pips, you'll be risking like 200 pips just for you to make some money from it. Like I was risking 130 pips here, almost 140 pips here, and I was risking about 20 pips here, and I made about 1:3 risk to reward. So why did I take this trade? Now, when I saw price was kind of reconsolidating here, price was ranging somewhere here, I was seeing all this move. Immediately, I saw this bullish engulfing. I was like, okay, this is a W chart pattern. Those of you that know about chart pattern, you know this is the first leg. Price came up, broke the first leg, came back again, did a double bottom. So double bottom is more or less like W chart pattern. Double top is like M chart pattern. So this is I was talking about it. If you can check my previous video, you'll see it. So this is an M pattern. So immediately price did this bearish engulfing, bullish engulfing. I said, okay, price is here now. Now boom to the upside. So that's just how it is. That's just what make me took the trade to the upside. This chart pattern here, this whole chart pattern. That was why I took the trade. This whole chart pattern, the W chart pattern, the double bottom, W chart pattern, all of them are the same thing. That was why I took the trade. That was why I took the trade. This was the first leg, came down, rejected, went up, broke the neckline, the first leg, came back again, did a double bottom. Yes, it's like it broke it, but it's a double bottom. That was why I put this triangle line here. Immediately, I saw this sound bearish, bullish engulfing. Then I saw this candlestick that came all down, retraced back more than half. This particular bearish candlestick, I was like, okay, this hammer candlestick. I was like, okay, it's time to buy. Then I bought and I made my money. That was on Monday morning. So moving forward. Now, I did I even trade on Tuesday? Did I trade? I think I didn't trade on Tuesday. I think I was busy on Tuesday. I didn't trade on Tuesday. No, I think I traded on Tuesday. I don't know why it's not here. Maybe it got deleted. I traded on Tuesday. Can't see the information here. But anyway, let's move forward to Wednesday. Now, Wednesday, I saw this particular ranging market. Now, look at this first ranging market here. It happened here again. Okay, it happened here again. I already know that price was going to drop because on the 4 hours time frame, we are bearish. Where is it? Tiga. On the 4 hours time frame, we are no on the 4 hours time frame. As at the time I was selling, yeah, this is the previous lower high that markets created. So when price pushed down, it did a double bottom, trying for me to what buy back to the upside. So I I saw the opportunity that okay, since price was going to do like Fibonacci 78% retracement from this particular from the lower high to lower low. So I was targeting that price will push back here again because this is the higher time frame before it start buying to the upside again. Then when I saw this bearish engulfing on the 4 hours time frame, and I saw these two little candles, I knew that okay, price will always push down to come back and retest this is the previous support that got broken. Like this is a resistance that rejected here, pushed up, came back, like kind of a structure here. So I saw one here, saw one here, saw one here, sold one here. I was like, okay, time to buy, a time to sell. So when I got to the 15 minutes time frame, I just took when I saw this uh bearish engulfing, though it was not really that smart enough. I was like, okay, it's fine. Since it closed properly on the 15 minutes time frame, I think on the 30 minutes time frame, it did way better off on the 30 minutes time frame. Yeah, when price did like kind of this sound like kind of an M formation pattern here. It's not really that clear, but it's like kind of an M formation pattern here. Immediately this 30 minutes just broke the 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 zone I drew out here. Then when the another candle pushed up and have a bearish candles confirmation here, I knew that price was going to drop. Then I just entered and we made a lot of money from here. A lot of money. I think it's over almost 1,000 pips, if I'm not mistaken. Oh, 700 pips. Then I closed the trade. And that was it for that particular day. And this was on Thursday. On Thursday, I took this trade with the mindset of 78% retracement has been completed on the Fibonacci. The price we are here at 78% retracement. Oh my goodness. Sorry. Yep. That we are already at 78% retracement, and this is like kind of a money star formation on the 15 minutes time frame. Let me take this off so you see it. Like kind of a money star formation on the evening time the evening star formation, and here is the 78% retracement. So I was like, okay, let me take the trade. I took the trade. I just made about almost 120 pips, and when I saw, I just went out of the trade because I was no longer comfortable with the way this particular candle rejected this zone. Immediately candle closed inside this box, I was like, nah, 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 it's going to reverse. I just left it. So when price came back here, I closed the trade. I closed this trade at part portion because I knew it was going to, because he rejected it. I was like, no, it's not supposed to close back inside. It's supposed to close below the zone that I drew out. So when price came back to this place, it did something like M pattern. It did this first engulfing candle. It did this pushed up and came back. Then it did the second engulfing candle. Then I entered from the second engulfing candle. but price took me out. So it's not just win, 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 win. So I also lost this particular trade. I just left it till on Friday. On Friday, when price did this bearish engulfing, came back up. I think I went to the 5 minutes time frame. Then I saw this particular candlestick, this bearish engulfing. I entered the trade from somewhere here. That was where I entered the trade. When I entered the trade, no, yeah, I think yes, I entered the trade from here. Price went up, took me out, and went to my direction. I was like, okay, that was it. I would have made about 250 pips here. I said, okay, that's it. That's it for the day, for the week. And I rounded it up. So it was just a win and lose week, which is normal. That's part of trading. You don't just win all the trade. It's a normal win and lose trade. It's a normal win and lose trade. So when I saw this this minor head and shoulder pattern here, there's a minor head and shoulder pattern here. When I saw this minor head and shoulder pattern here, I took the trade from here, but when it came back, yes, it was somewhere here I took the trade, not there. I took the trade from somewhere here. It came back, retested, took me out, and went to my direction. That was what happened because I entered because of this head and shoulder. When the price came back to the neckline, I entered the trade off this engulfing candle. It took me out and went to my direction again for the second time. So that was it before it went against me. So what are we looking at for this week? What are we looking at for this week? First of all, I go to the weekly time frame and see what the market is doing on the weekly time frame. And I like reading candlestick, how the previous candlestick of the week closed and how the other one opened. Those are the things I read. Now, if you see last 2 weeks, there was a sound bullish engulfing candlestick here. Now, look at the other one that just closed on Friday here. It didn't, let me zoom in so you can see it properly. This is a bullish engulfing that closed last week. So that was what I was looking for. A sell, retest, close, take people out. This is the third time or fourth time price I've rejected this particular zone. Now, last week that just closed on Friday here, look at how the market closed. It came back to this zone, tested it, and went back. Though it didn't close to half of this candlestick, but it went back. That's a sign of bullish momentum. Let's go to the daily time frame. When we get to the daily time frame, you see that yes, we are bearish on the daily time frame, but there is a form of kind of chart pattern. This is an MW chart pattern here. This is a W chart pattern here. Price is trying to go up back. Now, if you see that there's a very sound bearish engulfing 2 days ago, and now look at how the other one closed. There's kind of a formation chart pattern here pushing that market is going to go back up. Now, if you go to the 4 hours time frame, you see, remember I told you that this is a double bottom. This is an M pattern. This is the third time price came here. So price pushed up, came back. If you even put your fib retracement now from somewhere here to here, from the swing low to the swing high, you see that price retraced back. It tapped on the 100, clear liquidity here, took people stop loss and went back, closed above the 78% retracement. Closed above 78% retracement, and price is pushing up to the upside. Now look at how this market closed. Now broke this neckline of the W chart pattern and did a very clean money star formation here. A very clean money star formation here. So what me I'll be looking at for, let me just duplicate this. I put this here. This is a zone. So before I will start buying, I will have to, my chart is too messy. My chart is too messy. I'll check it on later on. But my chart is too messy. So I'll just take some of all these ones out. So it should be clean. The chart is too messy. So this is a zone I want price to come and take out first. Once price break this zone out, do break and retest here. Go to the upside, break down and push to the upside. Then when it comes back to the test before I can buy to the upside. But anyway, let's keep going. I will edit this chart later on. Now, this is the 1 hour time frame. Price, this was the 1 hour previous lower low. So price was trading lower low, lower high, lower low, lower high, lower low. I pay attention more on the 1 hour time frame because this is where I get my entry signal because I only follow the direction of the 1 hour. most times it's going to be against the daily or the 4 hours time frame, because I'm a day trader. Gold can just give you 200 pips, 300 pips within a short period of time, like 2 minutes, just give you 500 pips. So I don't really hold gold trade for a very long time. So price came back, did a very clean reverse, a very not really a clean head and shoulder pattern, inverse head and shoulder pattern, but it's kind of still okay. And retested this zone, pushed up, came back. So if you see that price have not been able to break this zone, this particular support here, price have not been able to break it. Came to this resistance, came back. Now look at this clean engulfing candlestick. Came back, did not close below it, did never get to the ending of it, 100% of it. Did like think like 78%, and boom to the upside. So what are we expecting now? It's price to keep going up. So look at the 15 minutes time frame. It's a very clean inverse head and shoulder. It's ugly, but I see it as an inverse head and shoulder. Now look at the neckline. The neckline has been broken. So what are we expecting for price to come back? This is the 15 minutes time frame. What are we expecting for price to do about 78% retracement before it start buying? So come back and retest this zone here before we start buying. But in the meantime, let's go to DXY. So my analysis for the week is that gold is going to be bullish. That is what I'm saying. So I'll just be looking more for a buy than a sell on gold this week. I'll be looking for more of a buy than a sell. If I'm selling, then it has to be a retracement, but it's not the trend. The trend is bullish, and I'm going to be bullish with the market. I'm not going to be bearish with the market when the market is bullish. Now let's check DXY. All right, DXY. DXY is showing a very strong momentum to the upside, so I don't really know what's going on. So DXY needs to be dropping for gold to be selling, but for gold to be buying. So if DXY is bullish, gold is bearish. If gold is bearish, DXY is bullish. But gold is very bullish and DXY looks bullish. Because if you ask me, I will not be selling this market for no reason. Unless maybe the next candlestick that opens do a very clean bearish engulfing here, which is what I will expect. A very clean bearish engulfing, then price come back to 50% of it, then start dropping. That's just what I see. But at the moment now, if I can actually trade DXY, I won't be looking for a sell. I'll be looking for a buy. But I'll have to wait for price to come and break this zone here first before I will start buying. This is a resistance that is being hidden. I've not really thought about support and resistance, but I will have to teach about it. So that's just it. Anyway, we'll see when the market opens. We just anticipate, we do our analysis, but the market needs to go to where it needs to go to. So thank you very much if you've watched this video up to this extent. Thank you very much for listening. You can subscribe to the YouTube channel, please. You can leave your comments and ask questions. You can also click on the description box. There is a Telegram channel where I post all my trade for the week. Any trade I take, I post it there on my Telegram channel. You can be there to copy my trade. Thank you very much for watching. Until I see you again. Thank you.